In fact, let's get in a market opinion. Vikas Khemani, the CEO of Edelweiss Securities, joins us ahead of the Edelweiss India Corporate Summit that's due to take place in Singapore and Hong Kong tomorrow and day after. Hi, Vikas. It looks like some amount of panic selling coming through for a market. How much lower do you think the markets could go? Where would the base be in this downward correction?
I think clearly, in terms market would to regain or to find a new direction on the upside, market needs to see corporate earnings pick up, which I think by and large we believe that should happen somewhere around third quarter of this financial year. We'll start seeing some uptick out there. A lot depends on how government spends and how spending picks up on the capital investment side. So I think that till the time that happens, you will see markets remaining in a narrow range, maybe some, and as and when some negative news comes like what happened yesterday, market might sort of sell off. But I do believe that at around, in and around 8,000 levels, there should be decent number, because I think we should not forget that markets are in a reasonably good valuation zone at the bottom of the earnings cycle. So, we are trading at 15-16 times earning at the bottom of the earnings cycle, and which is looking to pick up. So, in short term, it might sort of remain in this range, maybe of 8,000 to 8,500, but it's very difficult to call a number on the downside. But I would be really surprised if it falls below that. And on the upside, it will remain probably capped till we start seeing it around 8,500 levels.
Hi Vikas, we've seen a very sharp reaction in the financials post-policy. I mean, even today, look at the way the bank Nifty has fallen. How are you looking at individual banks now?
We are not apologetic about our overweight situation on banking and financial services. We are very, very bullish. Again, as I said, that our view is medium term to long term. We believe that if the economic growth starts picking up, investment activity picks up, the first sector to benefit will be banking and financial services. Obviously, it is coming out of its own pain, and somewhat pain still persists. But I think as the environment starts picking up, environment starts easing out, I think you will see this segment doing well. We have seen similar kind of things getting repeated in 2003 to 2008 cycle, where I think State Bank of India moved from 200 to 300 rupees to almost 2,000 plus rupees over 5 years period. So I think I see no reason why credit growth picks up. And once this issue settles down and credit growth starts happening, banking stock will be, in my opinion, forefront of the market driving.
Okay, what's interesting is, Vikas, within the financial space, you've added PNB in your model portfolio. Would this be a good time to buy PSU banks?
Yeah, we are very positive on the PSU banks. I think, again, because we believe that there's a quite bit of pessimism right now. Valuations are sort of very, very cheap. One side, you are seeing public sector banks trading at in and around 1 time book. Another side, you are seeing private sector banks trading at 4 times book. Now, undoubtedly, that private sector banks are good banks and they are growing well and they are very well set to capture the growth in the past. But I think, so there our whole hypothesis is that there's a huge amount of valuation gap. And secondly, I think these PSU franchises are also not bad. Right now they are suffering from the asset quality issue or perception of asset quality issues. Like I think banks like Bank of Baroda, where there's not much significant asset quality issue also, I think are suffering from there. So I think what we've been looking at is that how much of the risk reward adjusted for the risk, what is the kind of reward possible for you. Look at the valuation, and then as and when the environment starts settling down, I have no doubt in my mind that we have seen the same cycle repeated in the past also. So these banks also will come out, but one has to be patient, one has to be living through this pain of either underperformance or no performance. And but we are taking a 2-year view that probably in 2-year view PSU banks might not underperform, probably might do well given the valuation gap between the two segments of the banking sector. Having said that, we are also bullish on private sector banks. It's not that we are not bullish on that.
All right, point noted. What about the consumer pack? Here the news has been so bad. There's weak monsoons, rich valuations, individual stocks, the likes of ITC, Nestle have their own spell of bad news. How do you like this pack, and what's your take on the individual names?
So I think very clearly, we are not very, all these companies are good companies, but I think from a return perspective, investment return perspective, I think you will see them underperforming. They're already in some sense underperforming because I think they were trading at a very high valuations. And in the recent past, before the investors started realigning their portfolio, everybody was overweight on them. So we are seeing now readjustment of the portfolio from overweight consumer to realigning towards the interest rate sensitives, banking, financial, automobile, and all those segments. And that's the reason you are seeing these segments will continue to as a consumer will continue to underperform. And I'm talking about that in next 12 to 18 months. And the demand will take time to pick up in them, because I think still rural economy is slow. So I think you will see volume growth in these companies also remaining muted. So hence, we do not at this point in time, by and large, very positive in the sector. Obviously, there are names which we like in the segment and all those things, but broadly, we are slightly underweight on the sector.
Okay, slightly underweight on the consumer sector. Any other sectors that you're currently... okay, before we come to underweight, let me get in some ideas for our retail players. You spoke about banks from medium to long term. Any other sectors that you're currently overweight?
I think, valuation comfort is not necessarily sector specific, frankly speaking. I think valuation comfort you have to seek in the stock, because I can't say one particular segment is cheap or one particular segment is, but I can say that there are very good companies available at a reasonable values. Like automobile, we believe that, there are companies like Bajaj Auto, Mahindra & Mahindra, they're available at a very reasonable valuation, and they are both interest rate sensitive. In my opinion, if the economic growth comes up and the infrastructure efficiency improves, mobility is the first thing which gets impacted, and if mobility impacts, these guys get benefit. So I have no doubt in my mind that these companies will start delivering growth. Right now they are being marred by the slow volume pickup, but so is reflected into their valuation. So I think probably that is the one segment where we are finding some comfort in some of the names. But I would again say that the valuation comfort is always in the names, never in the sector, and that is where I think you've got to seek your ideas.
All right, so you said that the upside for the Nifty is capped at 8,500, but on a slightly longer term, 12 to 8 months, where do you see the upside?
I think, in my opinion, from here, if I were to look at let's say 12 to 18 month scenario, we will still deliver 15 to 20% return, because I think this year itself we will grow earnings by 15%. And I don't see any reason why markets will get derated. And secondly, I do believe in the second half of the year earnings will start picking up, and that will probably re-rate the market. That will start building expectations again. And hence, if I were to look at from point to point, 12 to 18 months from here, market will easily give 15-20% return annualized. I have no doubt in my mind.
All right, Vikas, we'll leave it at that. Thanks so much.